That's why I explained up front that for their own fleets.
Just log in and then I will make him host.
This is nice benefit.
I guess I'm a little concerned. I have myself in my address. book.
Well, Darwin's actually hosting it.
Yeah, but just the name for the news email.
Mary.
I don't know how to fix that.
It's actually Nancy. There's your
Yeah.
job. And then Nancy should be on there. Hi, Nancy. Can you hear us?
Yes, can you hear me?
Loud and clear.
Thank you.
He said that he's going to make you a host. So just stand by for that.
There we go.
There we go.
Good, I'm on my camera. I'd
Yep.
rather have that because
Yeah.
I'm here just in case anybody shows up at the office and they can see it on.
Let's make sure
On
we get
there.
that C21.
Oh, okay.
Darwin said he's about to make you a host.
Are there only 3 of us?
So far,
Wow.
it's only 12:57.
Well, there you go. That must be it, huh?
Yeah, and we haven't, we don't have this regularly scheduled, so it's when Darwin's available and he wasn't available today.
Oh, he wasn't? Oh,
We
okay.
scheduled it for today. Thanks, Andrea.
Well, I'll tell you what. There's a lot going on in the world and things happen. I know that.
Yeah, the whole world is crazy
Absolutely.
with what's going to happen. What's worries me a little bit with the war,
Oh, no kidding.
Russia.
It's just unbelievable. Never thought we'd see this in our lifetimes.
Yeah,
Makes it kind of hard to concentrate on things like this. So maybe he just got waylaid and
oh, Darwin.
yeah,
No, he's
it's working.
yeah, the other meetings in Troy office or something going on.
Oh,
And then there was they were going to do the walkthrough, whatever, for the C21 awards.
oh, right.
Yeah, and then that so that we scheduled it for today, and then that happened. They have to do that, and then he made a mistake there. It was later. So then he has this other meeting they're at in Troy. So
Well, he kind of has to be all over the place, doesn't he?
yeah,
Wears a lot of hats.
yeah.
Yeah, I guess one question I was thinking about, I don't know exactly what you want to talk about today, but I just kind of feel like now that we're in this, whatever's going to happen next,
Uh-huh.
with the interest rates going up and the market stuff, it makes me even more nervous to invest
Right.
more money in real estate, although, we're still interested in doing it. It's just,
Yeah. This was going to be a discussion today.
okay.
With everybody, live mic. So yeah,
Okay.
those are what I've sent out that email on, 1, 2, 3, 4, 5, 6 don't know if you saw that.
You know what, I scanned it.
I was gonna cover, how to find and analyze the deal. And that stuff. So even if it's just you and me, we'll wait a few minutes. There comes somebody else,
Okay.
I think. Nope. Yeah, it's Robert Kiyosaki is who I started with in coaching. And
That's Rich Dad, Poor Dad.
yep, yeah,
Yeah, I read that many, many years ago.
yeah. And he went to a real estate investing seminar, and when they the teacher said, this does no good unless you go out and, you got to go. This is the easy part, where now the hard part starts to go out and finding a deal.
Exactly.
And back when
I've been looking. I'm just really kind of, like I said, just, with everything going on. I mean, my husband's 63, he'll be 64. We're looking at trying to retire in another year or so.
Yeah.
And so we're really just,
yeah.
I guess I'm a little gun-shy, more so than I was last fall when I started attending these meetings.
Well, Kiyosaki, when when he started, there was no internet. So they actually had to go look at the properties.
Oh yeah. Go pick up the key, go to the, yeah, I remember those days.
Yeah, you were in the business that long ago.
Yeah. Yeah.
So, yeah, can you imagine?
Draw your maps out. Yep. All the instructions, plan out everywhere you're going. Yeah.
So a group of 20 of them, from the, they broke up into groups, and they, said, we're meeting on Saturdays and doing this. Out of the 20 of them, him and another guy were the last two remaining in doing it and continuing. And they're both millionaires. So everybody else dropped off, quit, So I wasn't surprised with this meeting if we were down a few, but I'm surprised there's not a few more here yet. And so like I say, we'll give it a few more minutes and we can discuss some things.
Okay.
And I'm glad to try and help. And
I appreciate it, Jeff.
You're welcome. And did you ever own rental properties before?
The first house I bought when I was 19, my friend and I were fixing it up to live in it or rent it. And we both got engaged. And that was what? Geez, I'm 59. That was 40 years ago. And we never ended up renting it out because we both got engaged. And I talked with my broker about it. He came and looked at the house. He's like, this house is in the best shape it's ever going to be in. And we did all right on it. I mean, we did a lot of work. We learned a lot.
Yep.
Did a lot of physical work and sold it. And if I hadn't done that, I wouldn't have been able to buy the house I bought before my husband and I got married.
Yep. So you've experienced the benefits.
Experience. Oh yeah. Of real estate. Definitely. We would not be in this house had we not started back, 40 years ago. And so we did go ahead, since it just sounds like it's you and I. We did go ahead and do that where we have the availability of, if we wanted to downsize from this house to buy something smaller for cash and also invest somewhere between 50 and 100 without using that, into the apartment thing, but I don't even know if that's enough.
Right. Doing the passive deals. Minimum's 50,000, but there's some that are less than that, some smaller apartments. And the first time investors have gotten in for 10 or 25,000 into deals. But the more you can put in, the better off you're going to be. So,
Well, 50 would be comfortable.
yep. Mhm.
Because, once he retires, we have no
Yep,
health insurance or any of that,
Yep.
so. And we just got our statements, and of course, the market's going crazy, and
yep,
of course, that's a given, that's a constant. I mean, back when it dropped to 6,600 on the Dow,
yep.
I mean, considering that, we're not doing so bad, but,
Uh-huh. And that's the thing with that. The problem with it, like you say, when you start taking distributions from your 401 or your IRAs and that, if the money gets cut in half, well, you were expecting to live on 5% of it if you are. Now that gets cut in half. If you had $1 million in there, you're going to live on 50,000 coming out of that. Now it's cut to 25. Otherwise, you're going to have to.
I just hope Social Security, they keep saying they're out of money, so where are they pulling this money from? I mean.
The good thing is money's not real. It's fiat. They can print it. The bad thing is
They've already printed too much.
Yeah. Even though Biden's saying
Another 3 trillion or 2.5 trillion?
Yep, yeah.
Just recently, again.
Yeah. And they saying that's not causing inflation. I think they're lying to us.
Oh, they're absolutely misrepresenting things.
Yep. Yeah. It won't cost anybody. It won't cost us a dime. Oh, sure. Right.
Tell that to someone who's, single mother, or the mom's trying to stay at home and the husband's working, and then they're not being able to put gas in their car, for Pete's sake.
Yeah, our gas has doubled, so that's 100% inflation on gas.
And home heating, it's going to hit everybody.
Yeah, so you need to make some extra money. So
yeah.
Let me cover these things I sent out, on a little bit, some stuff I have written down, and then we'll discuss things. So yeah, nobody else is coming on here. So,
well, I'm sorry.
That's all right. Like I say, we're going to have to talk with Darwin. I mean, is there a better time of day? Scheduling it at the same time. Like I say, interest, people are interested, but it falls off. I mean, I can't do it, or what's going on in the market. But number one, I'd written, how to analyze, find and analyze a deal. And Robert Kiyosaki has a formula that's 100 out of 100. You look at 100 homes, out of 100, you're going to find 10 that are worth putting offers in on. And out of that, you'll buy one. I think it might be more like 1,000 you need to look at right now before you find one. But the good thing is most of them can be looked at online, and if you want to go see one. So you've got searches set up on the MLS?
I've got all kinds of searches set up. I mean, my email is mostly results from searches.
Yeah. Yep. I do too. Every night, I just go through them and see what's new, what comes up. So that was one thing I was going to tell others, if you don't have that set up, that's your first step. Setting up a general one with no parameters, or if you want parameters, you have yours set up with what they
some
call.
I do, some I don't. I have different ones for different areas because of the type of house that I would want to buy in that area, kind of thing.
Yep. Okay.
So I've got several. You name it, and I probably got it in there. Other than, like you said, it's just a matter of going through them and analyzing what's even there, and taking that step.
What do you do to analyze them? I put out a 1% rule. It should be able to rent. If you pay 100,000, you should be able to rent it for $1,000. How do you?
I have those notes from the last couple meetings.
Yeah, and then the yearly gross rents times 7, plus or minus 10%, depending on the condition, equals MAO, they call it maximum allowable offer. And that's one thing with Darwin. I wanted to have the little bit of a PowerPoint too, but I don't have that because Darwin, it didn't work
Okay.
out for us to set this up. Oh, 5 people are waiting. I have to let them in. Hold on here.
Okay.
I have not done this. Sorry. Okay, here we go. Hello, everybody. Turn on your audio. Oh, Dawn. Hey. Can everybody hear me?
Yep.
Everybody go ahead and turn on your mics. Because this is going to be more of a discussion. I'm sorry about that, everybody. Darwin is not here, and I have not done a Zoom meeting myself. So I didn't realize I had to admit everybody. So can everybody hear me?
Yep.
Yeah, go ahead. Like I say, everybody turn your mics on. It's going to be more of a discussion. And sorry about that. Darwin's had another meeting he ended up going to. So, so like I say, I wanted to go cover these, the email I sent out, and like I say, Darwin, we couldn't get, couldn't be here to do kind of a PowerPoint on those points. So I'll do this. I'll just have to read them. I said I wanted to cover the how to find and analyze a deal in the Robert Kiyosaki's formula that I learned. You got the 100, 10, and 1. The looking at 100 properties is what I learned, and out of those 100, you'll find 10 that might be worth putting an offer in on, and you'll buy one. But in today's market, it might be 1,000 that you're going to look at out of those where the price is high. And so that's what that's about. And then being able to analyze the deal. Who has searches set up already? Go ahead, if your mics, go ahead and jump in.
Yes.
I have searches set up for the local areas where I like to look as well.
Okay, Caroline. Anybody else? So that's the first thing to do, is setting up searches and just going through them every day and looking and seeing what's on the market. I look at them every night. I have a bunch of searches set up. And then, looking close to home, and then looking, if you want to get into what they call the sweet spot, 3 bedrooms, 1.5 bath at least, with a basement and a garage. Those prices are priced high, but just looking at everything in general is a good way to start. So when you start setting up those searches, and you want to also set up rent comps and learn about the market in your area. Then out of those 100, and nowadays, when Robert Kiyosaki, when he started in real estate, I know he had said that I had his coaching. I started out with that. There was a group of 20 people. He went to a seminar, real estate seminar, and they said they had to meet together. They met together in a group. He met together with a group of 20 people, and they had to go look them back in the day when you had to drive around to see all the properties. So out of those 20 people, he ended up with 2 of them ended up sticking it out, and him and the other guy that did that, you know, they've ended up millionaires. So it is a lot of work in doing that. And to analyze the deal, the 1% rule, if you buy it for $100,000 or have 100,000 into it, you should be able to rent it for $1,000 a month. To get into more depth, you have to, you figure out the payment. We all can do is a 20% down, do the mortgage calculator. What's your payment going to be? What can you rent it for? And hang on. Sorry about this. Like I say, I got a text to let somebody else in. Is anybody out there that can help me?
Tell me what to do. Tell me what you need.
Hey, oh, there it is. Like I say, I've never run this, Dawn. Glad you're here.
Yes, sir.
So see you. So are you there, Nicole? Go ahead and unmute. Everybody can, like I say, you can unmute. So yeah, Darwin wasn't able to be here. So anyway, sorry, are you there, Nicole? Yes, no. So what I see here, Dawn, it looks like she's in the meeting now.
Mhm.
All the others.
Oh, it says we can't turn on the mics, the microphone. We
How
can't
do
unmute.
I unmute everybody?
Be great.
How do I do that?
Thanks, Nicole. I don't know, because I'm unmuted.
Can do mine
did
just
it
fine.
when
I just have a carload of kids, so I muted myself.
Cool.
Ask to unmute. Sorry about this, everybody.
It's all right, Jack.
Mute all. I see. Can anybody help me?
When on my computer, when I first tried to join the meeting,
Yeah.
it has me test my volume, and that gets me in unmuted. Or excuse me, that tests the volume, and then I say join with microphone, and I don't know if
You
maybe.
did the right. I say you did the right thing. You just unmuted everybody because it came up on my screen. I was muted and it asked me if I would like to unmute, that the host would like me to unmute. So you hit whatever you hit is correct. I'm not sure why Nicole can't unmute hers.
Nicole, can you unmute? Yeah, on each one, I'm clicking on it, says ask to unmute.
Nicole might have to leave and come back in, maybe if it's not working.
Uh-huh.
Is it fighting with us, Jeff?
Hello?
Is it fighting with us? I just jumped in.
Oh, Darwin.
Yeah.
Yeah, Nicole says she can't unmute.
She's driving though. Says she's driving, so.
Oh, that's probably I can unmute.
Oh, okay. All
Saying
right.
it just came up and went away. She says that's why I keep text. That's why I can't
Yeah.
keep texting. I'm driving. She's driving.
Gonna be loud. All right,
Oh.
well, you guys are all set. I've been kind of watching from a distance as we've been wrapping up a meeting, so I'll let you guys go and then I'm gonna log out.
Okay,
All right,
thanks.
you got it.
There's two options.
All right, that's what's going on. So anyway, the email I sent out, I don't know when Nicole jumped in, but we'll just continue with three. Number three, I had how to figure out the cash on cash returns. I was talking about, we all have the mortgage calculators. Hopefully you find a deal of what would it cost for the down payment, what do you got to put into it. So you just divide the okay, how do we do that? You figure out the cash flow. You know, if your payment's $500 and you can rent it for $1,000, all your PITI, the principal, taxes and insurance, and it rents for $1,000, so you have a $500 positive cash flow. You have 20 grand into it. You divide the $6,000 by 20 grand. Does everybody know how to do that? So that would give me a return of 30% is what I'm figuring. So you want to be able to figure those returns out. And then like I say, the best way to, I gotta go back, sorry. Going back to finding the properties, looking online, and then ones that look like they're worth going to look at. It's best by learning by going and doing that. Then figuring out what your returns would be and would it be worth making an offer on. The other thing I had on here was the landlord insurance. If you don't all know that about the insurance, it's not about the cheapest price, because if you don't have good coverage, you've wasted your money. And will the company pay when you file a claim? Also, the kind of insurance coverages you need. If you don't all know that, the rent's paid when you get landlord insurance. The insurance company, if the house burns down, will cover the rent while they're rebuilding it. So you're insuring your risks that way. There's also one that I found out about is the code updates. Did you know about that, Dawn?
Don't.
Yeah, Dawn?
Sorry, Jeff, what was your question? I didn't understand it.
Yeah, did you ever hear about having the code updates on your insurance?
No.
No,
Mm-mm.
you never heard about that one? I
Mm-mm.
listened to a podcast, but they cover the rent losses. But if you have code violations, like the kitchen burns down and it's not up to code, it's going to come out of your pocket.
I didn't know that. Okay.
Yeah,
I'll investigate that.
Yeah, that was one that's like, so I called my insurer right away. Said, yeah, you had code updates, and also I had an umbrella policy that wasn't what I thought it was when I switched companies. When I got to the point where the Allstate it was, they insured up to 4 homes, and I got 5 and 6, so I had to switch insurance companies, and I didn't know that umbrellas policy I had really didn't cover what I thought it covered. And I didn't even know if I had code updates from the other insurance company. And I had homes that were older that I couldn't get cost replacement guarantee on, because if they're more than 50 years old, so I didn't really have the coverage I thought until I went with a better insurance company. So any questions on that? Anyone?
What companies do you use?
I have Select Underwriters there in Waterford, and there was another one that I found somebody that specializes in rental properties. I don't have their name, but I used to go to a local meetup that there was a insurance agent there on that. So,
Okay.
yeah, there's important things that, I learned about over the years. So, any other questions?
You said if a house is over 50 years old, you
Yeah,
couldn't
I
get
think-
coverage, or it wasn't as good?
Well, I think most companies wouldn't insure replacement guarantee on homes that were 50 years or older. So you
Okay.
had to insure it for, what am I going to insure it for? 100,000, 200,000 coverage. So they wouldn't give it a replacement guarantee. And I thought I had it covered. Never had a claim with the Allstate. So anyway, the rules I want to cover that I had there in the email, the Robert Kiyosaki's, the rich don't work for money. Just wanted to remind everyone of that. And the money doesn't make you rich, but the knowledge does. Knowing this stuff, the cash out refis, and buying properties right. I heard an investor the other day. It says, if you're happy when the prices go down with the cash flow, if you're still happy with owning it, you made a good purchase. Even if the value goes down, you still have the income. And then Del Walmsley's 3 rules: never lose money is his #1 rule. And 2, when you buy something, an investment, any kind of investment, it must have cash flow. It must put money in your pocket every month. And his rule #3 is you can't get rich slow. Dell's is. Doesn't mean overnight, but the next 5 or 10 years, if you can become wealthy by having the income replacing your income. So, and the 3 types of income, just want to remind everybody of that: earn, portfolio, and passive. The earns, the job we do in real estate. The passive income is the stocks, bonds, mutual funds. Then passive income is anything you have that business, real estate that you don't work at, the rentals and stuff that puts money in your pocket. So I just wanted to also, I don't know what I've told you when I got started, how I got started. In the first property I bought, or I had an offer on that I let go. It was with Darwin. Like I say, I know some of you are new at this, have never invested yet, and it's a little bit scary. So the first property I had a offering on was Darwin. It was actually Darwin's listing, and it was a short sale. And I never should have let that go. But I found a better, more in the sweet spot, a 3-bedroom, 1.5 bath. And the other one was a 2-bedroom, 1 bath. But now that house is worth probably 150,000 or more. I should have bought that one. Look back on it, and it sold for 30 grand is what Darwin sold it for. So those are the kinds of things. Having a coach helps you, whether or not you should buy it or not, let it go. So that was the second house was the one I bought that I had an offering on. And I had to learn to start asking Darwin questions, even though he wasn't an investor. Kind of learning from him too. And, is this a good deal or a good house or not? So, and I already went over a little bit what Robert Kiyosaki, how he got started. And Del Walmsley, another interesting, when he got started, he was kind of drug into the deal. The broker that found him the deals. And he was told the same thing, you know, this education does you no good unless you go out and find somebody that can help you. So the broker that had 10 deals, don't want hers, that Dell looked at, and he wasn't sure about buying them, and the guy kind of, you know, drug him into the deals, or started to buy the first one. And he signed the deal and went through, you know, we'll offer this. Well, you know, it was listed for 35,000. We'll offer 25, and he said, well, they take it, and they wouldn't finance it. It wasn't financeable. The air conditioner was gone, stolen, and the house needed work. So we'll ask the bank to fix it. It was a bank foreclosure. And Dell's going, will they do that? Will they do that? And the guy goes, you're an idiot, the broker. You don't know what you're doing, do you? Very interesting story. He ends up getting the deal, and he used a credit card for the down payment. Oh, and that was another thing, 10% down. Normally they want 20, but they offered with 10% down, and he ended up getting the deal. So that's how he started. And the bank replaced the air conditioner, painted it, and fixed everything up. And the broker actually got him the tenant before he owned it. And with the security deposit and the first month's rent, all he had to do was bring $22,000 to the deal. And he bought 3 more like that. Ended up selling those 10 years later for $100 grand. So I wish those days were here still, but they're not. So
Don't think they'll ever be back, or we're all in trouble.
yeah, it'll be bad if it does again, huh? So those guys now, well, let's say, okay, I did cover. I wrote myself some other notes on setting up the searches on the MLS. I have wholesalers, I'm on their list, and their prices are high. You think they would be a deal because they're a wholesaler. I haven't seen too many. I've seen some really bad junk that they want way too much money for from wholesalers. Tax auctions are very interesting. Oakland County tax auction I went to a few times, and I ended up buying one from there. But when I first started searching in 2012, or buying and looking and going to the tax sale, I think 2013, 2014, Oakland County's, one day, it was 2 days. One day was all the townships and cities and everything on the first day. The second day was just Pontiac. There was like 30 pages of tax foreclosures. Now it's the same thing at the auctions. It's people are paying too much for them. And the other thing is letting other people know, you know, what you're doing. You're looking for rental properties and agents. It's not just you searching for them for yourself. Property managers, they got owners that you know, they want to sell. They may want to sell them. Talking to a property manager, I got to know some property managers, a couple of them through the local real estate investment groups. So the local meetup, real estate's ours, you know, with the lifestyles, but there's a couple other local ones, Oakland County REIA and Michigan real estate. I used to go to those, but finding deals there or networking with others that are, you know, of like mind and investing and stuff. So just like I've told others, other agents in our office and stuff, if you found a deal and you can't buy it, you know, yourself, if you ended up with a listing, if you had a listing, let me know. And you know, if you can't buy and it's a good deal, the house needs a lot of work, you know, and it's only worth, you know, if it's only worth 50 or 75 grand and after repair value would be 100 or 125. If you got that listing, I would let you keep the 6%, you know, so that's the kind of thing you find other agents if they know that's what you're looking for. Does that make sense?
Yeah.
Anybody? Pardon?
Yes.
Yes.
Yeah, because the best part of the deal is not just the commission on the sale, but you know, the appreciation of the property and the rental from it. That's where I make more money than if I was to get the 3% on the deal. You know, if you had the listing and I was the buyer's agent, even though it's myself, it's well worth letting you keep the 6%. So another point I wanted to make, if the market does go down, and who knows where it's going to go, Dawn, what are you seeing with mortgages? Is it business slowing down some?
The Federal Reserve wants to slow demand. So they met with the House last week and then with the Senate last week and said that there's three things happening. Number one, the interest rates have been so low that have caused a push up of demand.
Yeah.
Number two, another problem is housing starts have been problematic. And number three, there's been a problem with employees. So in an attempt to try to even out the demand with supply, they're going to let interest rates go up in an attempt to try to get supply and demand to meet more so that these outlandish sale prices slow down. So that's what's happening. And then on the 15th, 3 days ago, so that would be this week, they raised rates a 1/4 percentage point. And that was the Fed funds rate, which they haven't touched in 3 years. So they're doing what they're saying they're going to do, and they're pulling back purchasing of bonds. So they're having a sell off of bonds, which are going to cause rates to rise. So right now we're at pre-pandemic interest rates, in the 4s. As long as rates stay at about 4.75% or below, in 2019, rates were at about 4.75%, 4 3/4. So if they end up settling there, that's about what they were in 2019. And we should see more of an evening in the market flow without it hurting real estate production or loan officer production. Where it's going to get ugly is if there's a significant rise in interest rates that's uncontrollable. So if rates stay in the high 4s, even if they creep into the low 5s, I think it's going to be sustainable.
Okay. How is it right now in your business? If things slowed a little?
So I went back to 2019 and I looked at all my business in 2019 and I measure it month to month against 2019 and I'm up 20% from 2019. So my goal is to be up 40% from 2019. I think last year and the year before were outliers. So I took them out of the mix and I'm focused on a normal purchase market business and focused on that. Our lead generation has been low, January, February. This is the first month that our leads are gangbusters right now. So our April, May, and June, July will be pretty strong, pending there's houses that come on the market.
Yeah.
The issue that I see is it's hard for a person to let go. I have clients, most of them have interest rates in the 2s. They're about to let that interest rate go for a rate in the 4s. Okay. So what I do for those clients so that they can get out of that mental, the client that I worked with yesterday, I said, for a new home, the interest rate difference will cost you an extra $238 a month. So is moving to a new home for you and your family worth the $238 difference in interest? And they were like, definitely. So that overcame that objection.
Okay, thanks.
That's what
something I don't know if everybody on here knows Dawn with Mortgage One, but she is willing to help, correct?
Sure. sure.
Anyway, mortgages, I know we've got others from C21 that on this call that that may have other lenders they've worked with and stuff like that. But Dawn's also an investor. You have any single families left?
Yeah, I still have about 4 single families left.
4, okay. So she's a good source of help and knowledge that's willing to. And she also owns a 10-unit apartment complex. And you still searching for another apartment?
Yes, sir.
Okay. You're gonna, 100 unit,
Anything above 50,
50? Okay,
50 to 250.
yeah, and that's
That'd be
where,
amazing.
pardon?
That would be amazing.
Yeah. And they're hard to find. Anything
haven't-
possible right now, offers that you've been finding to put in on?
I found something in East Tawas that was possible, but it's a little too far for
Right.
us.
Right. So.
Nicole Freed said earlier you had said you were talking about different means of income, and Nicole's chimed in and she said earned portfolio and passive. So I'm
Yeah.
guessing that she generates income from earned portfolio and passive income.
Yeah,
I thought that was
Nicole is really read Robert Kiyosaki and knows that stuff. So anyway, with the market, here's another point I want to make. If the market did go down, well, what we were talking about in interest rates, and here's something I want you guys to think about. Interest rates in a rental property don't matter. If it goes to 10 or 20%, as long as you can make the spread and make a 10 or 20% return, makes sense? Don?
It
Yeah.
does.
I mean, there was something here that the podcast I listened to in Bob Helms, who I'll mention this book in a little bit. They had never seen Bob Helms was called the godfather of real estate. He'd been in it forever. And he wrote a book that be in the top 1% for real estate agents. They had never seen, and Kiyosaki, and he said it too, in 50 years, never seen prices low and interest rates low. It had never happened before because the prices correlate with interest rates usually. Interest rates go up, prices go down. Correct, Dawn?
Yes.
Yeah.
For
So that's
sure.
the thing with rental real estate. It doesn't matter what the interest rate you're paying, as long as you can make a good return, cash on your money. So another thing I want to mention too, and like I say, I have no idea where we're going, where the country's going, what's going on in the world. You know, if the real estate market crashes again, there's still going to be a lot of buyers out there. Does anybody know who they are? Anybody? They're going to be the investors. So getting to know a lot of investors, you know, there's still going to be a ton of business out there. When we're used to, most agents are just used to working with the people that are buying it for their single family residence. You know, that's a problem like it was in 08. They quit buying. So anyway, any questions on that? Any comments?
If there's
I
a
have a comment.
tax,
Go ahead, Nancy, and then I'll go after you.
I typed in the chat, when it's a tax foreclosure, can you go through the property at
Yeah.
all? Because you can,
Actually, the tax foreclosures, they started a program Oakland County did with Realtors to the Rescue, it was called, where the agent can make some money on it and they can let a buyer in the property. But you're still bidding against a whole bunch of other people and it's going to be hard to get. Now, they don't do it for all the properties. They do it for the nicer properties because they want to get higher bids. So Darwin took me through some of them. We did do that. And the chances of a realtor as a real estate agent getting involved there and your buyer being able to buy one probably are slim to none.
Well, I mean, as the buyer, to invest.
Yeah, the buyer, it's like I say, when I went to the first year tax auction I did the first time, I don't think they were selling everything, and they were selling them for dirt cheap. So, but there's the same problem right now in the auctions. There's not enough properties and people are bidding them up, so they're overpaying for them. Any other
Okay.
questions? Who else was, somebody who had a question, comment? You were gonna jump in
Just had a
there?
quick comment. Yeah,
Yeah.
when we had spoke last time, we were talking about, I guess some people were nervous about investing with, not knowing where the economy is going and all that kind of stuff. And I just had remembered this comment from last time that I didn't make it. And something like important to remember, even though prices are high right now, for an investor or whatever, and it's hard to find these properties, even if the market were to even out or even go down a little bit, renters always need rentals. You're
Yep.
always going to be able to find a renter that needs to rent. So it doesn't matter if the economy is fantastic or the economy is crappy, there's always renters, either
Yep.
case,
Yeah.
either scenario.
Agreed. That's so brilliant.
It's a great point. Yeah, and that was something that if I remembered, was gonna make that too. Yeah, people need a place to eat, sleep, and live. What do we need? So yeah, there's always going to be renters. And actually, if you buy your property right, and the economy, things get bad, rents have gone up. They're ridiculous. There's a property I have a search set up because I've thought about when I sell my property just renting. And I saw a property by me that they wanted $24.99. I'm in Clarkston here. And if anybody knows, it's at the Baby Road and Sashabaw in the older neighborhood, the southwest corner. Frankwell is the road it's on. It's 900 some square foot, 3-bedroom, 2-bath. The basement was finished. Are you kidding me?
Right. Are you kidding me?
$2,500 is what they were asking for the rent. It'll be interesting to see if they get it, but it was on the MLS. So talking about that, Bob Helms, I'm going to hold up here. There's the book, Be in the Top 1%. This is an investor and a real estate agent, started way back a long, long time ago. I don't know. So like it says on there, a real estate's guide to getting rich in the investment property niche. So out of this book, it's a great book to get, especially if you're an agent and you want to invest. This is the first book he wrote, and he recently, I think, passed away last year, and he's been in it forever. But he calls it a IPS, investment property specialist. You need to learn how to speak the language and talk real estate investing. And it's about the numbers. It's not about how pretty the house is and all that. It's just, what are the numbers? What's the return? But in this book, I just want to take a minute and read about mismanaging your portfolio can be very expensive. So when you buy rental investment properties, when should you sell? When should you refi? Stuff like that. So this is a very expensive lesson. So I just want to read it. I'd like to, and this is Bob Helms, I'd like to share an example from my personal experience that illustrates just how expensive it can be to mismanage your portfolio. My brother and I owned and operated a 50-unit apartment building near San Jose State University, which we kept for 25 years. It was a Class C property in poor condition when we bought it, But over the years, we improved it. And of course, the rents and the building's value increased considerably. Bill and I were both working engineers who owned other investment properties. So as cash flow to the apartment building increased, we largely ignored it because we didn't really need the building's cash flow or our individual budget in our individual budgets. And we weren't paying close enough attention to realize that we should have traded at least once or maybe twice during our ownership. So we bought the building for approximately $235,000. How would you like that, Dawn?
I like that a lot.
Yeah, in 77, and we sold it for 2.6 million in 03.
Wow.
The mortgage balance was only about 400,000 and it was hemorrhaging cash flow. Nice. Those are good numbers. Sounds like a great success story. But that's the simple view. Let's look a little closer. Had we been smart enough to refinance it and, number one, acquire additional properties with those funds, and number two, had we also done at least one 1031 exchange, a 1031 property exchange during those 25 years, we would probably have realized at least $20 million return. So the 2.6 is great. And his son, who's the head, does the podcast, Robert, he estimates that the potential return was well over 40 million. If they had sold, moved up in bigger properties, refinanced, bought more properties. So very important point I wanted to make, you know, because a lot of people out there buy rental properties and think I'm good. I'm making a, you know, 2,000-3,000 a year, a month or so, or 4,000 or 5,000. And that would be good extra income, wouldn't it? So he says, you see why we believe too much cash flow is not such a good thing. And so here's the lesson. The lesson here is that because we didn't need the money, and therefore we're not paying enough attention to the opportunity, we simply were not prepared to take what the market was ready to give us. Obviously, we needed to take action to derive the benefit that was available. I hope you will learn from our mistakes and not let this happen to you. To be sure, we want our properties to deliver sustainable, positive cash flow, but maybe not bucketfuls. So, comments, questions?
Maybe. That's hard to think about. It's
Yeah.
true, but it's hard to think about. You taught it to me like this, Jeff.
Yeah,
If the property is bearing too much cash, then I have to pay taxes on it. But if I take out the money, the equity, it's tax-free. Debt is not considered taxable.
right.
So if I cash out, refinance a property, and then use it to buy other properties, that's a good thing.
Yeah,
The other thing I've learned from you is cash on cash return. If I have a free and clear property, and let's say it's worth $500,000,
yep,
and let's say I bring in $50,000 a year in income from it, my cash on cash return is at 10%, I think then.
yep,
But if my down payment was $100,000, and let's say that I bring in $30,000, my cash on cash return could be 30%.
yeah,
So it sounds like once a property is free and clear, either you should sell it and do an exchange and move up,
yep. So you don't pay capital gains tax. on
or
that.
refinance, cash out, and use it to buy other properties.
Yeah. And the other point that Dell, that I'd never learned from, but from Dell, what's your, and this is Dawn's, is great. I'm glad, so glad you're on it, because this is a real life example. You paid $550 for your 10 unit. And what's it worth now?
Maybe 950 to $1 million.
Because of the increased rents and the reduced expenses. Commercial real estate, everybody depends on the income. The net operating income is the value. They figured on the income. It's not like a house where it's in, the appraisal method.
Jeff, what needs to be the income percentage? About 8% right now?
On what?
What needs to be for valuation? Does it need to, is it
So
8%? The
yeah,
cap rate?
the big thing on Dell that taught, now you got to figure that return, the cash on cash return on the value of the property, the $1 million. So are you bringing in 50,000 a year? Is it cash flowing positive 50,000 a year?
Oh, you mean take 50,000 divided by $1 million? Because that's the
Yeah.
value, then the cap, but that's not, so that would be 5% then.
Right. So that's the thing of having too much in there, your returns are low, and I know
It's
Dell comments,
diminished, right? Your return,
Yeah.
because you could take that $1 million and do something else with that money.
right. Plus Dell makes the point of just putting it in, you might as well put it in the market if you're only going to get that in the stock market.
Right.
You get 5%. So you don't want to ruin the return. I know it might be, this is a little in depth, but it's great that you're on here, Dawn. Because Dawn can actually sell that property. If you sold it for $1 million after closing costs and do a 1031, you're taking all your capital gains, $400,000 or $500,000 in capital gains, right?
Right.
And buying a bigger property.
Mm-hmm.
It's going to cash flow more.
Mm-hmm.
So that's about it on today. What I wanted to cover, other than I want you guys for the next meeting to set up your searches. If you haven't already, do your, figuring your cash on cash returns with with a mortgage and all that. And if you need help with that, contact me. Dawn probably would help you too, right?
Probably not as good as you are in cash on cash
Okay.
returns. I feel like I'm still learning that part.
But I mean, anybody that needs help, Dawn's, like I say, Dawn's a great resource to use, and you're
It's an
willing
honor.
to help, right?
Yeah, most definitely.
Whenever you can. Dawn's real busy, I know.
Well, everyone's busy. You
Yeah.
take time for what's important, so I enjoy it.
Yeah. So, yeah, like I say, if you're not sure and setting up your searches and what you're looking at, like I say, contact me, call me, email me. But when you do that, if you haven't already started looking for properties, it's going to take time of just looking online and looking at them and seeing what you're looking at and trying to find them. Is it a good deal or not? A real good deal, you may not think this, but there is one in Clarkson that just came up. I might look at it on my way home. $75,000 and it's worth 225. It's a piece of crap though. I mean, there's a tarp on the roof. It is really bad. It's a 3-bedroom, 1 bath with a garage on a slab, but probably easily sell for 200. So can I get it for 50 or 75? I would have to put 100 grand into it. But would it make a good rental? Would it, if it's good bones? But I don't know. I looked at it a year or so ago, and I think they were asking 100,000, and they were living in it. And there was no drywall on the ceiling, and you saw the rafters all the way up, and the people were living in it. It was really bad, but you can get something like that for the right price. So, it's worth buying. So the next meeting, you know, I want more you to share as you start to learn your aha moments. And here's one that when I started doing this and looking, how do I know what's a good deal? Got to go, Don?
Yep, I have a 2 o'clock. Thank you.
All right, great, thanks. See ya. So I started, what's a good deal, Darwin? Is this worth buying? You know, what should I buy? So I'm a mechanic, been a mechanic all my life, and I could go look at cars and find a good one. I knew what I was looking for. And that's what my aha moment was. The more and more I looked at them and what was a good house, what was bad, you know, what, and when I started buying them, they were all would be great cash flow because the prices were half price when I started doing this, and they were starting to go up in 2012, 13, 14. So that was one of my big moments, like as I got familiar with houses, what I'm looking at, even looking online, I got to realize who was the good agents, and they took the good side, the pictures, they took the good side of the house. They didn't show some of the things in the pictures. And when they didn't show them and you went and looked at them, boy, the bathroom was terrible and stuff like that. So that's the kind of thing you need to learn for those of you that are just thinking about doing this and haven't done it before, you know, and don't have a rental. I know we have, who else on here? Is it Jonathan, you on here? Because he's got a couple of rentals that he manages. So anyway, those are the kinds of things you got to start to learn. And this could take months or a year or two before you buy your first property. So I just want to let you know, it's not something, if you're ready to jump in right away, you have the financing lined up, you have the down payment. It still takes patience to find a good deal. So any questions or comments? Anybody?
How do we find out, like you mentioned, this Realtors to the Rescue in Oakland County?
Yep.
How do we find out about tax auctions and things like that?
Oakland County's website, and you got to figure out, I haven't done it in so long, you got to find it and go to the tax auctions and stuff, and it's done twice a year. Well, like I say, the thing with going to tax auctions, you need to go around and look at them. If you can't go in them, you can at least look and drive by. And here's the scary thing about doing the tax auction. I went and found a few that I wanted to bid on, you know, 5 or 10 of them. And I drove by each one in the morning before the auction, because if it burnt down between the time you looked at it a week or two before and the time you buy it, it could be burnt down.
Oh
and
my
you
goodness.
and you still have to buy it for what you bid. And then you have to pay for the cleanup of the house and the removal of the property.
Wow.
They won't let you out of the deal. If you don't pay for the deal that day, or pay for the auction, the one you bought, you will not be able to ever bid again or buy from the tax auction. Yeah, you got to read through the rules. It's very, you know, it's very scary, very risky. But as soon as I bought that one property, which I bought for a great deal, 17,000, 3-bedroom, 1-bath on a crawl, no garage, off of Baldwin, is in a good area of Pontiac. And I didn't do that good on it. I made some money when I rented it. They had to be evicted, but made a little bit of money when I sold it. It wasn't a great deal, but the owner was still in the property, and I had a property manager, do the property management of it and put a tenant in there, and they had to end up evicting them after a couple of years. But as soon as I bought the property, you got to call your insurance company and get insurance on it. And I don't know if everybody knows this. Speaking of insurance again, if you don't let your insurance company know that the property is vacant, they won't cover it. So if you had a rental property that's going to be vacant for more than 30 days, and you don't notify the insurance company, and of course, when you get insurance vacant insurance when they're vacant, it's a lot more expensive. My house in Fenton, I think it was a month or so. I think it went from under 2,000 to over, I can't remember, 4,000 or 5,000 a year it would have been, but that was only for a short term that I had the insurance on it. So yeah, a lot to learn, a lot of things to learn and know. And like I say, it's a little scary to get started, and it's scary, like you said, Nancy, right now. Buying
Yes,
a good
ma'am.
property, not, so. Any other comments, questions? Kiana, can you unmute? I can hang around here. Do I? And Nicole?
I'm at work, so it was kind of
There.
loud. I had mine muted. Can you hear me?
Yep, I can hear you now.
I had a question earlier in regards to where are you finding those searches? Because I'm really new at everything, so I was just wondering where do you set up those searches you were referring to?
Where do you live? I remember Warren, right?
I'm in Macomb County. Yep.
Yeah, just set it up in your neighborhood close to you. You can set up Oakland County if you wanted, but you're probably going to get too many. And here's the thing with setting up a search: set it up for $200,000 and under, or $100,000. Where do you want to be? What could you afford? If it's $100,000 homes and under, set it up for that price range. Okay, makes sense?
Okay, so are you setting up these searches on the MLS, or are you setting them up on Zillow or real estate?
No, on my MLS. I got searches set up for myself on the MLS. And
okay, yes, that makes sense. Thank you.
yeah, that's the best place, but like I say, the prices are all too high, but that gets you got to look. That's part of doing and learning, is just looking online.
What I've been doing too on those searches is just trying to get acquainted with all different areas and types of homes, and getting more familiar with the price ranges, because they're so different from what I was used to.
Yep.
So by setting up the searches, it's not only just to find the property, it's for the knowledge of what's happening and what the trend is. And I think, with everything that's going on too, I want to do that a little more before I jump in, but who knows, I might find something by accident. The seller I saw one where the seller dropped the price $100,000. He was asking 240, dropped it $100,000. That tells me this person needs to get out of here, but it was on a slab, and that scared me off, so I never went to look at it. And by now it's probably sold already.
In my property, my first one that I bought, that's just a slab with no garage, 1.5 bath, 3-bedroom in Clarkston, paid $75,000 for it. It's worth 200 or more. It might sell for 2.25 right now.
See, I see a slab and I think cracks, foundation issue, and I can't get past that.
Buying in those, the ideal thing is a basement with a attached garage, 3-bedroom, 1.5 bath at least. But I
Yeah,
haven't, most of mine
You're
weren't that way.
doubling your price.
Yeah. So the first one I bought was a slab. The second one I bought was a crawl, ugly house. I sold that one, paid 63, sold it for 4.5 years later for 135, and had the same tenant in it for the 4.5 years. And they took very good care of it. They did no damage. I gave them their full deposit back. I didn't have to keep any of it. So the third one I bought was a little 2-bedroom, 1 bath, but it had a bathroom downstairs that couldn't count as a bathroom. It had half walls. It had a shower and another divider in between the shower and the toilet in the corner. It had a little sink outside of it. So really couldn't count it as a second bath, unfinished basement, but it was there. Sold it to the tenant after 5 years. I paid 55 and sold it to her for 108 with no.
Well, you had great timing.
Yeah,
too.
no commission, and that's how I funded the moving into the next, apartments into the passive deals. But that house was the great thing about selling it to the tenant is I didn't have to do anything other than go to the closing, doing the PA. I did it, everything, going to the closing and handed her the keys, my spare keys. So I didn't have to do any, paint, get it ready, fix things up. That was nice about that deal. The fourth and fifth deals were the Pontiac deals that I made a little bit of money, did all right. Both had to be evicted. The sixth deal was right around the corner from me in Waterford. That was a 3-bedroom, 1.5 bath garage, 2.5 car garage with a basement, kind of in the sweet spot. That one I bought for 105. 2 years later, I was going to re-rent it when the tenant moved out because it was a guy that brought me the deal off market. The lady didn't want to deal with agents and, didn't want to put it on the market. And she knew what she wanted for the house. She wanted a clear 100,000. So I gave her 105 to pay her closing costs. And the house was worth 140 or $50,000 when I bought it. A little bit dated, but it didn't need to do anything other than paint and clean it up. When the tenant moved out, I didn't re-rent it because I'm like, Darwin, and you got to do this. You got to have a consultant. You got to have somebody to bounce it off that, Darwin's been in the market so long. I'm looking as a, it might be worth 170 or 180,000. So can you take a look at the comps, Darwin, and will this sell? Will it appraise for 170 or 80,000? He took a look and he's like, yeah, I think it will. So I put it on the market for 180 and sold it for 175. So, that's.
Well, I think for
Crazy.
those of us that are older, we all know timing in real estate is everything.
Yeah.
Back 30, 40 years ago, what we would have done.
Yeah, and even if you buy now, and
this is unprecedented, this craziness.
Yeah, the market and the overbidding and the overpaying, and yeah, it's crazy, but take advantage of it as an agent. Get the higher commissions to fund your real estate investing. That's what it's all about, is taking your ordinary earned income, as Kim Kiyosaki said in her book. As an investor, you take your ordinary earned income and turn it into passive. So That makes sense?
Sure does. Thank you
Yeah.
so much, Jeff.
You're welcome. Any other questions? Comments? Yep, Nicole, I see the book, Rich Woman. And yeah, that was great. She's read it, so great. So if that's it, we will schedule another meeting and hopefully Darwin can be here so it's a little better. We schedule it. Darwin thought he was
Oh, it
available.
was great. Thank you so
Well,
much, Jeff.
I didn't let everybody
for your
in.
time.
Sorry about that. I didn't let everybody in to begin with. So,
Live and learn, right?
yeah, I'd never done a Zoom meeting and Andrea helped me get it hooked up and started, but so,
I don't know how to start one either, so.
yeah, we're old, but
Yep.
I gotta learn.
Okay, thank you so
know,
much
let's-
and have a great day, everyone.
Yep, thank you.
Bye.
Bye. See ya.